Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and we service the Tulsa and Oklahoma City real estate markets for exclusive investors. So all we do is investment real estate. Well, what I want to talk about today is something that I periodically do, and it's called taxes and insurance. All right, it's extremely important that you know how important this is to you if you're an investor. As someone that has invested and still invests in other states other than Oklahoma, I can tell you there's some extreme difficulties out there, especially in Florida and California. I've invested in Florida, I have invested in California, but I can tell you that insurance in some places is extremely hard to get. In fact, in Florida, the major insurance companies have all pulled out. It's very, very difficult to get a decent insurance policy. A lot of people down here in Florida, they own their homes free and clear. And so they self-insure. That's how serious this basically is. Trying to get hurricane insurance, good luck with that. You're gonna be paying a lot of money. But if you're an investor, you're in the same boat in that particular situation. You're in Texas, taxes. You're in a situation where you're having to pay 2.5 times in taxes. The question is, can you get that much more rent in San Antonio than you can in Oklahoma City and Tulsa to make up the difference? And if you're paying a higher amount in insurance, that's going to be a problem also. Now there's a third rail to this, and this is going back to insurance for a moment. And it's this, that what kind of insurance you have is extremely important. So can you get $1 million as a liability policy on your property? Or is it going to be $200,000 or $300,000 or $100,000? It varies from state to state. I know in Florida, $300,000 is typically maximum. Oklahoma, it's $1 million. People don't sue you for a little amount of money. They may never sue you, but you need to be prepared. Second of all, deductibles. What do you want? You want a $1,500 or $2,500 deductible or a $10,000 or $20,000 deductible? That can make a huge difference in terms of, if something bad happens to your house, like a fire, all right, that costs you $20,000 or $30,000, you're going to be out a lot of money. So the deductible is extremely important. Then the third thing about insurance is loss of income. All right, that's something that's basic in every insurance policy we do in Oklahoma City and Tulsa. Let's talk about that fire. You've got 4 months of vacancy, but you're making a mortgage payment. Well, guess what? If you have loss of income, your insurance company is paying you monthly until you're back up and running, plus the amount of money it's going to take to go ahead and get it fixed up. So what we try to do here in Oklahoma is make sure that you're properly covered, that you got enough insurance there. If somebody sues you, it's not coming out of your pocket. Your deductible is not high, so if something bad happens, the insurance company's going to be paying a lot of money for you, not you. And third thing is that you have a loss of income that's extremely important to you. Now, I will make one other statement, and that is contrasting what it costs in terms of insurance. Oklahoma has an income tax. And what happens, there's 3 types of taxes that you've got to pay if you want to support your government. Income tax, property tax, and sales tax. If you don't have income tax, you got to do more in the other 2. And that's why places like Florida and Texas and California, among others, are a lot more expensive in that particular respect. We are not. We have very, very low tax rates. So our tax rate, our insurance coverage, vastly superior. It really helps on your cash flow, and that's what's important to us, that not only do you get appreciation, but because of our low rates in insurance and taxes, that you have something that's building wealth for you over the long term.